Hello everyone. Thank you very much for joining our webinar today. We'll just give it a minute or two for some people to come in and then we will kick off. For anyone who's just joining, we'll be starting in a minute, just waiting for some more people to come in. So welcome. Okay, I think we should get started. So thank you all very much for joining us today on a lovely Wednesday afternoon. This is a co-hosted webinar with Yapily. So this is a leading open banking provider across UK and Europe, if you are not familiar, and Super Payments, who are an incredible merchant that we work with, a incredible PSP that we work with, who support merchants, and together we can really help with increasing customer retention and loyalty. So I'm going to kick off by introducing you to our wonderful panelists this afternoon. So from Yapily side, we have Lisa Gutu, who is our VP of Sales. She is all across our European clients and leads the EMEA market and business development. And then we have Nicole Green, who is our VP of Product, Policy and Strategy Development. And she has an incredible background in product management strategy. And from Super Payments, we have Dave Smallwood, who is the VP of Enterprise Sales and Partnerships. Dave, would you like to just give us a little bit more information about Super Payments so people can familiarize yourself with the great brand?
Sure, absolutely. So Super Payments is building a brand new payments network sitting on top of the open banking rails that exist today, initially in the UK, helping merchants and consumers do payments in just a better way by enabling rewards in the transaction and also making it free for the merchant at the same time. And the free part gets transferred over to the consumer in the form of a reward. And that's how we drive loyalty and adoption.
Wonderful, thank you. So just to give you a flavour of what you'll expect today, we're going to talk more about open banking, the rise of adoption that we've seen across UK and Europe, where it stands and what we can expect. Dave is going to give you some insights into Super Payments, sort of best practices, and really give you the nitty-gritty details to help you really retain customers, and also how rewards will dramatically impact this. And then we're going to sort of talk about our 2024 predictions, so hearing from our Yapily team as well as hearing from Dave from the Super Payments perspective. And then we'll give you guys the floor for sort of the last 15 minutes or so you can really ask your questions. So you can ask them to all our panelists, or if you want to speak to someone specific. If you look at your nav bar, you have a questions drop down. So please utilize this and drop in your questions. If something pops into your head and we're not at the Q&A period, that's fine, we can still answer your question. If you will also see, there are handouts. So these are kind of just additional guides to kind of help you continue your journey. But also you can contact us after the webinar if a question didn't get asked or answered, or if you would like to get more information about either Yapily or Super Payments. So feel free to reach out to us after the webinar. So let's kick off from hearing from Nicole to kind of get a better understand about where we currently are with open banking.
Hi, everybody. So I'm just going to talk a little bit about the roots of open banking and where things are going before we get more into detail around how the adoption curve looks in open banking, which Lisa and Dave will speak to. So open banking is now 6 years old, which is exciting. It started out as opening up access to payment accounts, and this is both for data and for payments. What we've seen with data is a bit of ups and downs in terms of trying to figure out the use case and gain traction on it. But the area we've really seen great demand is in the payment space. And this is really seeing open banking as an alternative, a strong alternative payment method. Regulators have seen the high cost of cards as a market failure, and they're looking at open banking as a competition remedy. So where we are right now in this journey is actually, it's a really busy time. I think last year was really busy. I think this year is going to be incredibly busy. And I think we're at an inflection point. So if you want to think about open banking as a continuum, we have the access to payment accounts, but what we're looking at now is in the next few years, opening that up to other types of financial accounts, and then beyond that to other types of data. So moving from open banking to open finance to open data, or smart data as they're calling it in the UK. And so we're seeing that kind of happening now in the UK. They're working on the DPDI bill, which will hopefully get royal assent this year, and that creates the foundations for smart data, of which open banking, future, and open finance is part of. And in Europe, we have the FIDA bill that was proposed as part of the PSD3 PSR FIDA package. Where we are then in terms of all the activity that's happening, so we're looking ahead, but we're also looking at where we are with open banking and how do we really kind of make open banking a strong foundation for which to build these successive kinds of this open data economy. So there's been a lot of concerted effort to make improvements to both data and payments, but particularly payments. And also to develop new use cases to create that competition remedy. So, you know, some of the things that we're seeing is in the UK, there is the Joint Regulatory Oversight Committee, or the JROC, as you know, because we don't have enough acronyms, which has been running a series of work streams looking at gaps in open banking and making a sustainable kind of future for open banking. And in Europe last year, we had the PSD3 PSR proposals, which are looking at kind of the successor to PSD2, which is obviously where all this open banking stuff started in the first place. Really key to that is this sustainability angle of how do we make this thing something that isn't just regulatory driven, because to date, these APIs that you can access have been provided from banks to PISPs for free. And obviously there's not that incentive there. So they're trying to make it so that there is a sustainable way where everybody who participates in the open banking ecosystem can you know, get some benefit from that and invest in it for the future. So we're seeing that in the UK now. There's a real push to try to get commercial VRP up and running by the end of this year, at least in what they're calling phase 1. And in Europe, the SPA scheme just launched. That's the SEPA Payment Account Access Scheme that's being run by the EPC. And that is looking potentially to do a pilot later this year. And that offers premium APIs in the EU space, including something that's very similar to variable recurring payments called dynamic recurring payments. So we're seeing a lot of things kind of coming up, starting to test how we can get to a commercial model, and then thinking beyond payments towards other types of data, access to other types of financial information, and the wider data ecosystem. If we take that just to kind of by the numbers, if we think about where we are with payments, the UK has the best data about where we are right now. The OBL publishes monthly stats that you all can access on their website. And what we're looking at is in the last year, open banking users grew 27%. There's about over 8 million open banking users now. And in the single payment space, that grew over 60% to nearly 13 million payments. In addition, in the last year, VRP payments, and this is sweeping payments, and those are me-to-me transactions, just to be really clear, it went from 0 to 1 million. So we are seeing that growth come through. And I think we'll continue to see some tailwinds there. The review that was done last year in the UK, what they call the Garner report, which is this future of payments review, was very favorable towards open banking. They're going to be working on a national payments vision in the UK, which should be helping to kind of create these tailwinds and push these improvements through in conjunction with what's happening in JROC. The EU, it's a little bit trickier to say how things are going because there's no centralized reporting, though there are some calls inside the PSD3 PSR legislation that asks for banks to report some data so that maybe we can get a little bit better idea of what's going on. What we do see is better take up in Western Europe, and that's where customers are more used to making account-to-account type payments. And there's actually a healthy number of licensed PSPs, so like 100 to 200 in that range, depending on the market. And we see that some of the markets that are more concentrated have a more consistent experience when you're trying to actually use open banking. So markets like the Netherlands, and they perform very strongly. Whereas we see a little bit more challenge in markets that have multiple authentication journeys, and in markets that don't use the euro. So I think that's probably hopefully a good summary. Please drop questions if you want more information, but I'll hand it back to you, Sophie.
Yeah, thank you for that really like comprehensive overview, and I think it's great, especially from Yapily's side, to see what an exciting year it is. Obviously, like you mentioned, the JROC report before Christmas shows that it's going to be an incredibly exciting year. If you have questions which maybe you don't want to hold on to until the end, there is that chat function, or the questions function, so you can drop your questions in and then we will get to them later in the session. I wanted to kind of hand the floor actually over to you and our audience to better understand where you are with your open banking journey. Are you a user at the moment? Is it something that you're considering? So I'm going to actually send out a poll, so we would really like it if you could answer, and it just helps us kind of understand where you are with open banking and if it's something you're considering. So I'll just leave it on screen for a little bit, just so you can have that opportunity to respond. So it should come up on your screen in a few seconds, and then you'll be able to answer. And then in the meantime as well, if you've responded, like I said, please use that question drop down, and we will also make sure that we have that email contact that you can reach any of our panelists as well if you have any additional questions after the webinar. Okay, final few seconds to place your votes, everyone. So we can see that 2/3 of you are actually using open banking, or just under, and then we've got sort of 20% that are still learning about it and 20% which are keen to start. So that's really good, and feels like you're in the right place, so that's good as well. So I would now like to kind of hand the floor to Lisa to give us a better understanding about what's being done to improve adoption in open banking. So Lisa, what is being done?
Hi everyone, and absolutely, Sophie, I'd like to share more insights on that. But I think in order to understand the adoption and how we can be more successful with open banking, we really need to understand what are the main drivers of the key players within the market. We're talking about banks, merchants, and customers. If you look from the bank perspective, they poured millions to create and maintain APIs that are mandated by the regulators across the last few years without any return of investment, which of course, especially at the beginning, led to very poor API quality and performance across the board. And it took at least 3 to 4 years to get to a level of decent API quality across many markets in Europe and the UK. From the other hand, if we talk about merchants, they're expecting the same level of user experience and conversions as they have with other payment methods, which of course depends on the maturity of the APIs provided by the banks. And it took quite a stroll to get us there. From the consumers, who are the center stone of PSD2, there has been lack of incentivization for them to really start using the open banking user experiences. And we are just starting to see more and more incentives coming up. And I'm sure Dave would love to share more around that later on, which overall made open banking adoption stroll for the first years and then slowly getting to a place where we are right now. In the beginning, we were only talking about low-hanging fruit use cases, money management applications, lending flow optimizations, accounting data automation, and top-ups for e-wallets and remittance businesses. but the last 2 years have been a real game changer with what Nicole said, loads of changes within the regulatory framework and 14 million monthly payments in the UK alone. We are finally seeing more serious brands and quite large companies using open banking, such as Apple, Alipay, Stripe, and many others. I'm sure we're going to announce it in the years to come. And this is all possible thanks to three main factors. First of all, the conversions across the markets are extremely increasing. For instance, in the UK, Netherlands, and Germany, we're seeing higher conversion rates, sometimes even compared to the local payment methods and cards, which foster trust and reliability from merchants and consumers alike. From the regulatory perspective and the market-driven initiatives, we're starting to see real changes there as well. And Nicole shared quite a lot of updates on that end. But my absolute favorite is probably the commercial virtual recurring payments, or how they call it in Europe, the dynamic recurring payments, that aims to incentivize banks financially to provide a reliable API with an extremely smooth user journey that will not only compete, but be a better alternative to cards on file and direct debit as well. This is something that will definitely shape the market, because banks are finally motivated to provide really reliable APIs to all the market leaders, from the PSPs to merchants, and of course to ensure that the consumers are happy. And merchants, they are seeing an increasing benefit of using Pay by Bank and are starting to incentivize customers as well with discounts, loyalty points, as well as faster checkout experience. So open banking is no longer a niche concept. Adoption is just accelerating, and I'm sure we will see more huge announcements coming up in the years to come.
Thank you so much, Lisa. Yeah, I'm sure it's going to be a very exciting year. And yeah, I think the rise of commercial VRP will definitely be one which is going to transform things for merchants. Again, I've had a couple questions come in. I will respond to those when we do our Q&A portion. If anyone is struggling to find the questions, you just need to look for the little question mark in a speech bubble, which will be along your kind of dashboard on the right-hand side. So this will really help when you're wanting to put your questions through. So I would now like to hand over to Dave, who is going to share some of the kind of best practices for integrating open banking. And obviously he can talk about super payments. So Dave, tell us all about it.
Thank you very much. And I really appreciate the partnership. So if you think about it, this is 6 years old, and we've heard the barriers, we've heard the challenges, we've heard that things are changing quite dramatically. And the point that I'm going to talk about here is really what matters to your customers, the merchants' customers, and how to get that experience right for them so that they adopt this method of payment. Because, you heard the headwinds on this were, merchant adoption is actually one of them, but then merchants like this idea. Everyone likes things to be cheaper, right, and easier for them to do. But then why would a consumer do it? Why would a consumer choose this over something else? And that's really what Super's come to solve. As our business model is 100% free payments for the merchant. They can then transfer those savings, some, all, or some more if they like, over to their consumers to drive behavior, to drive consumer adoption, to drive consumers paying and getting rewards in this way. So if we can go to the next slide, please, I'll just touch on three main points. In order to get consumer adoption to work, you need to make it seamless, you need to make it simple, and you need to make it speedy. And if we go to the next slide, seamless means informing them that this thing exists at almost every touch point in the customer journey, on the product page. If you go to the next slide, on the home page, telling them that these things are possible and there's a way to get something that they can't get anywhere else if they pay the way that you want them to. And on the next slide, so this is merchants then going out and bringing it into their marketing campaigns as well. So it's not just about on-site, it's also about off-site. Email messages, ads, social media, really nudging consumers along this path so that when they do come to that magic moment of trying to do a transaction, they remember that there's something special about to happen, that there's a way of getting more. There's a way of doing something that the merchant wants them to do, which is make it obviously cheaper for them. And if you do these things, and you do them well, we've seen merchants adopt, or consumers adopt on merchant sites as high as 70 to 80% share of checkout. Right? Very, very different to what we would normally see in the bank-to-bank or open banking space. So, it works. If you do it properly, it really does work. The next thing is obviously making it really simple. And really 3 focus points that they've got to get through is seeing some sort of incentive to do this, because if there isn't, they're not going to do it. Selecting the bank and being able to see that their bank is available. I think it's something like 85 to 90% of UK consumers already have their bank app on their phone. You're not asking them to do something they don't know how to do. You're showing them that they can and that there's a benefit in doing. So then they go into their bank app and they complete the transaction. And if you make that as seamless and simple as possible, you will get conversion up in the right, space at level, if not better than cards. A quick example on the next slide is, you can make it as simple as 4 taps in less than 15 seconds. Choose your product, notify that there's some sort of reward in that transaction, confirm with your bank app, and you're done. You can get it down to that and really, really bring that consumer engagement into the right place. And with Super specifically, we're not giving a reward on the first transaction. So the merchant gets 100% of the value of the first transaction. It's only when the customer comes back that they then have a reward to redeem. So you're getting 100% of your first transaction sale, and then you're incentivizing another transaction. And that increases repeat purchasing patterns and loyalty and habituation with your brand. And we're seeing in some cases, 40 to 50% redemption rates within the window, driving somewhere in the region of 30 to 40% increase in sales. So it's very, very powerful when done correctly. That's the high level on this. And if you focus in on these sort of 3 main areas, you can unlock the benefit of open banking and the speed and the rewards and loyalty that you can drive with your customers as well.
Wonderful. Thank you so much for sharing that, Dave. And I think it's great as well to see those kind of very clear points in how you can really drive that retention and loyalty, and obviously Super Payments being the perfect proof point of that. I'm going to give you guys another poll. So again, this is just to kind of get to know our audience better. So I'll put it up on your screen, and if you could please vote. So it'll be coming up on your screen in a few seconds. So we basically want to understand what is your biggest cost for offering payments. So things like fraud prevention fees, any risk associated fees, chargebacks, card fees, or anything else not on our current list. So when it comes up, please vote on your screen. As well, if there is something which you would like to speak about with us after this session, and if it's potentially related to either this or the previous poll, then we'll be more than welcome or more than happy to chat with you after. So I'll leave it up on your screen for just a few more seconds, and then we can see the results. So if everyone can see the results on the screen, we can see that there is more than 50% of you said that card fees were the biggest cost for offering payments, and risk associated fees, as well as chargebacks. So hopefully this will also be good when it comes to commercial VRP, as Lisa and Nicole were speaking about earlier. As part of that is also offering that kind of lower cost option and giving a more security as well. So we'll be very interested to see what happens with VRP payments in 2024. So I would now like to go around to our panelists and hear their predictions for 2024 when it comes to merchants and open banking. So Nicole, I'll start with you if that's all right, and just hear your insights.
Sure. I think my 2024 prediction is actually more probably a 2025 prediction, but we're on the start of a journey. So I want to signal a little bit of a journey here. And what I think is going to happen in the next couple of years is we're really going to move to a better user experience with open banking. I think there's been some small changes. There's been some things picked up in various work streams, including like looking at things like better error messaging, better payment status messaging. In the EU, we're seeing instant payments roll out. That's going to start potentially in the end of the year, but definitely next year. That's going to create a much better experience both for merchants and for end users in terms of being able to understand what's happening with the payment, being more secure and certain that a payment has gone through for release of goods, for example. But also when something goes wrong, being able to help the customer with like an alternate resolution path. Do you try again with open banking, or do you try something else so that you don't lose that sale? So I think there's going to be a lot of that kind of stuff that's currently being talked about, and I think it'll take a little while to bed in, but we'll start to see some of those improvements coming through this year and next year, both in the UK and the EU. It's surprisingly similar in terms of, even though we now have this split between the two, the kind of things that are coming up are quite the same in terms of that. The other thing I'd say is that I kind of touched on these commercial APIs in this world of commercial APIs. And one of the things we're seeing, and it's really apparent when you look at the details of the SPA scheme in the EU, is that they're essentially creating two paths of APIs. So you'll have your free compliance APIs is typically what they get called. Then they're taking those same APIs and making them paid for, but they're making them better. The feedback we've given is if you want to charge for the same single payment initiation, it needs to be faster. It needs to be better. The user experience needs to be slicker. We need to have the ability to choose how the customer goes through strong customer authentication, all these sorts of things. And so I think the banks are starting to realize, actually, I can go back and recoup some of my costs. I can find other ways to monetize. And so you might see these two tracks kind of starting to emerge. We'll see totally new APIs that are in the commercial space, but we might even see some rewriting of the existing APIs that are out there, but they should be more performant and worth the money. So we'll start to see some of that innovation happening. I've seen it a little bit in the UK and definitely in the SPA scheme in the EU. So I do think maybe not fully this year, definitely starting to see it next year, a much better kind of user experience coming.
Very good. Stay tuned, everyone. Lisa, what are your predictions for the year ahead?
I think the most interesting one would be to see mass adoption of sweeping in the UK. It's been live for a while now, but it usually takes some time between, the regulatory requirement, banks actually releasing it, then customers, or let's say businesses implementing it, and then users actually using it, but there's always a bit of a lag between them. So what I think is going to happen really is we're going to see a massive curve of adoption of the sweeping VRP, which is kind of me-to-me accounts and me-to-me top-ups, let's say, that are happening instantly, and it's having a very slick user experience in terms if you have just one mandate, and then afterwards the money are just taken in instantly, very similar to direct debit, but with a few tweaks to make it even better. The interesting part, I think what we're going to see in 2024 is the first pilots and the first live usage of commercial VRP. And that's something to definitely look after, because we've been talking about it since at least 3 to 4 years now. And I think this year is the year when it's actually happening. It's actually going live. NatWest was talking about it for a year or two, but without any real live use case. And we are having them right now live. I think that on its own will just make it really impossible for larger brands and big companies to ignore open banking, and they will just have to start using it, because people will talk about it, and the benefits of using open banking will be on par with direct debit and card on files. And then on its own, that will be like having a domino effect of the commercial VRP in the UK taking off, not just with NatWest, but with CM09 and with other banks. Then from the European perspective, they're slightly behind, but they are picking up with the SBA scheme and a few other initiatives over there. So I would assume we'll still see at least 1 or 2 pilots with large banking groups and maybe some of the neobanks within the European Union picking up on the commercial VRP or commercial dynamic virtual recurring payments, whatever you want to call them really. And that on its own will help us to see mass adoption and users being really used to using account-to-account payments across the markets. And of course, then merchants making sure, as the same case as Dave was showing, to incentivize them and to really show the benefit of using them. So I really want to see it happening, and I know it's already happening. So I'm very excited for this year, really.
Yeah, God, it's such a optimistic outlook and so positive. It's great. And Dave, what about you?
Everything that Nicole and Lisa said, and the main reason that I would back those things is the macroeconomic climate that all merchants are facing is tough. You know, there's all sorts of challenges around distribution and delivery and extra costs that are coming into the network as a result of what's going on in the world. So companies are going to be looking for ways to deliver value, and one of the pieces of the value chain is the cost of payments and the cost of fraud and the cost of chargebacks, all those sorts of things. And if companies can find a way of creating value and creating value moments for consumers by playing with these levers, they will. And you know, it's exciting to see that we're at this point in the journey. You know, I've been in payments about 20 years, and this has been a thing for a good 7, 8, 9 of them. And it's really, really exciting to see that it's actually happening now, and we're at the forefront of it together here. It's exciting. And I could see VRP definitely happening this year with some really big brands. Talking to a few already, and they're like, as soon as that thing's on, we're doing it.
Yeah, because I guess from like the merchant perspective, it's like that super quick checkout experience, like obviously reduced like card abandonment, it's greater security, no chargebacks, like all these very wonderful things.
Yeah.
Well, thank you so much, panelists. I'm now going to pass over to our audience so we can hear your questions. So as I said, it's that sort of question mark in the speech bubble if you want to join the conversation. So I'm going to go through the list, starting with a question come in which says, how do you see the prospect of international payments with open banking? So Lisa and Nicole, do you want to kind of speak on this?
Maybe I can start. So right now, especially across European Union, I would treat open banking international payments as a little zoo, just because it really depends from one country to another. For instance, if you want to make an international transfer, even within SEPA zone, so meaning European Union, from France, let's say to Germany, potentially the customer will have a few blockers. In some bank cases, they will be asked additional questions. In others, they might even need to go to their bank branch and enable open banking use for international payments within, a physical branch. In other cases, if we're talking about countries that have their own currencies, so for instance, let's say Norway, Sweden, Denmark, or Poland, across the EU, they treat any transfers that is not happening nationally, obviously as international payments. But it comes with very specific extra fields that are not as simple within the user journey that the customer has to manually add. And the worst part of it, sometimes they can charge as high as 12 euros for one simple transfer. This makes international payments right now very difficult to use or very difficult to justify compared to the existing methods. So what is happening and why probably Nicole and me were so excited about instant payments happening in the EU is that with instant payments and the law that has been passed, it means that the banks have to make sure that, again, within the countries that they have the EU zone, SEPA and SEPA instant cost is at the same level as one. And second, the EU regulators became much more rigid when it comes to discrimination of IBANs between one country to another. So we are seeing a little bit of improvement happening, and we just think that in 2020 it will just become much better. It might take up to 2025 for these changes to happen, but it is changing. And that's something that will definitely help to make international payments happen across the board. Again, when we're talking about international payments, we're still talking about either SEPA Instant or the faster, the FP scheme in the UK, just because how open banking is structured, it's not a new payment rails. It's still relying on the old rails, and we're still having to rely on those rails. So this is just quite important to note as what it means international payments. And how our clients are solving it, as probably just a few examples, is that they typically still rely on either domestic payments methods, and then they have, another account and they disperse it as like remittance in a way. Or what they're usually doing is that we advise them on countries where international payments actually work. So they know exactly that within these markets, even if, let's say, the payment is happening internationally, it will work without any issues. In these cases, there might be extra fees or extra fields that they need to complete. So we guide them through this process, making sure that they can get the most out of open banking, even with little edge cases that we still see from the market.
Wonderful. Thank you so much, Lisa. That was really great. I hope that's audience member, I hope that answered your question. And then we've had another question come in. How do you build trust with incentives? Many customers would be wary of the incentives and worry it could be a scam. Dave, would you like to speak to this?
We, first of all, by messaging it across the site and putting it in your marketing campaigns, your social campaigns, your email, messaging, and then also post-transaction, if the customer used another payment method, hey, did you know that you would have saved X if you had used this one that we're trying to get you to use, as ways of building trust. We're seeing very high adoption, very high share of checkout when these things are done well. And it really does address the concern that people are like, what is this thing? How does it work? So that's one method. The other is by highlighting the bank's apps in the checkout. Like, you're going to push this thing and then you're going to be directed to your bank app, and making it very clear that the thing that you normally use to have to check that it's actually you making a card transaction, that makes the checkout experience clunky and horrible. We're just taking you straight there so you can just do the transaction without any pain. Highlighting that to the consumer is also going to build trust.
Yes, I saw obviously on your slides you had all the just some of the banks that you've partnered with. You had sort of 10 or so on that slide. Yeah. So it's obviously very trusted, very secure process.
Yeah.
And another question: what would the targeted discount percentage to be actually converting the payer to use the open banking payment?
It varies on the, oh, sorry, I'm jumping straight in.
Oh,
anyone want to go? Okay. It varies on the size of the transaction and the product and the frequency that your customer is normally engaging at, right? So if it's a really big ticket item, you probably want a low percentage reward. But if it's a very big ticket item that people buy every month, maybe a high one, because you're trying to get them to come back to you rather than going anywhere else. So it really does depend on those things. With our platform, it's variable by the period that you're running, and also you can extend the life of the reward and reduce it as well. You can't do it obviously for a transaction that's already gone, that's set, but you can change it from point forward to change behavior, and we're seeing merchants do that really well. So one merchant that we're working with had a repeat cycle of once every 3 months. They put their reward redemption rate to once every 2.5 months, and guess what? A whole bunch of people came back 2.5 months and redeemed their rewards. So that drove their repeat cycle up, and now it's at 1.25, just to see if it works. And yeah, so there are ways of definitely driving this, and the percentage will depend on the product and the transaction size.
But it sounds like your merchants have that flexibility and control with super
Totally,
payments.
it's in their control. They can shift it as they like.
Wonderful. Thank you. I have another question. Do you see the European market will stop asking the payer's IBAN to complete an open banking payment in 2024?
Nice, this one's me. Not in 2024, no. The gears of regulatory change are slow. And I don't think PSD3 PSR package is going to go this year. I think parts of it will be agreed, but when will it come into effect? Maybe 2025, right? So within that, there is a section, and right now I should just caveat that this piece of legislation is still being worked on and amended constantly. So things are very much in flux about what's in and what's out and how it's being said. But within the PSR, there is a section about prohibited obstacles. And what it is looking at is different ways customers go through things like SCA and login and stuff like that, to see how they can create a better experience for customers, and that they're not like having to do SCA twice if they don't need to, and that sort of thing. So within that, there's going to be some kind of recommendations around, or kind of lists of do not do's, actually is what it is right now. But beyond that, I think we're also looking at other ways we can work around that challenge. There's like, you know, in terms of how this works, I think the German market, for example, is one which is particularly problematic with requiring this. So we're looking at ways that we can make that a more, facilitate that process for our customers and just kind of deal with the situation as it currently is.
Maybe just to add from practical examples of how we are overcoming it with our customers. So typically we use data as the first connectivity where the customer doesn't need to add their IBAN, and then they can still use their biometrics to log in into their bank. And once that is done, then the customer, our business customer, is storing the IBAN of the end user, so that next time when they want to initiate a payment, they already have that field, for instance. So we kind of still have a little bit of work around it. It is not ideal, unfortunately, but again, just because some specific countries and specific banking groups have decided to ask it, there is no way around it. What we found interesting, maybe specifically about Germany, was that customers know their IBAN by heart, which I found quite interesting, just because, you know, I personally don't know neither my IBAN or even, I don't know, like any other details by heart, which, you know, is quite a long number. But just because German customers are quite used to account-to-account payments, and they're very specific type of behavior where, you know, credit is not a thing, while e-wallet payments and alternative payments flourish in the country. Customers are just used to learning it, and having the account-to-account payment since 2005, which was outside of scope of PSD2 and happened much earlier there, people have a much higher rate of acceptance just because they know it. So for them, that's not even a hassle to add it up, while for other markets, it is indeed, and this is how we find ways to work with what we have right now while waiting for improved regulatory requirements to ensure that the banks that do have this impediment in the user journeys really fix them.
Just to wrap up on that point, though, where regulation goes, innovation follows, right? And to your point around catching the IBAN, so you don't have to remember it, lots and lots of things are happening to make this simple as heck for consumers to do. And banks that move fast, example NatWest with VRP, will sweep up. They'll get customers, they'll get more consumers, they'll get more merchants, and it, you know, doing those things will put them at the front of the race as well.
Yeah, thank you very much, panelists. Another question: what do you think about charities starting to introduce open banking to their donors as a way of raising funds? Would this be a good time to start exploring this method?
Definitely. And you know, there's also the potential here for us to get the payee's details straight on. and then allow in the UK the charity to get gift aid on that transaction as well straight away. So that, for a charity, that's an extra 12.5% on every donation. So if we've got the customer's details already and the customer agrees, we can just pass it straight on.
So more of that donation will actually end up with the charity, which I suppose is
100%.
very
Yeah.
important. Thank you. And had a question which is for Dave. What are you hearing from merchants? Is it the cost savings or the loyalty that is driving adoption of Super?
Interesting. It's both, and we put both on the table in the conversations we're having with merchants. And free is always exciting and interesting, but then if you can transfer a saving of 2-3% on payments into a 15% margin transaction, I know which CFOs will want the other one, right? The 15% transaction, not the 3% saving. So it's both, but one is enabled by the other.
Thank you. And I've had another question for you, which I think one of our audience members wants some clarification on. So you said 80% share of checkout for using Super Payments rewards. Is that correct? Do you have any examples?
Yeah, so it's as high as. It's not every merchant that we bring live, and it can go up to, we've seen examples of that high. And in that case, I can't say exactly who the merchant is because it's not public knowledge. But in that case, every time you do a transaction, you have to be logged in. You can't just buy as a guest or a consumer on their site without having an account. And through the account sign-up journey, they mention Super 4 or 5 times. So as you become a customer, they mention it, and they're like, you can choose your payment method. You're going to get some rewards over here if you do it this way. And they try and really nudge people to using Super. You can change your payment method to other payment options if you like, but it's that sign-up journey that's sort of squishing them into working entirely with us. On average, I would say we're in the zones of 10-15% share of checkout straight away on most retail experiences that we're lighting up.
Well, thank you. And so another one back to you about from a stats perspective. Do you have any stats on how these kind of loyalty programs can increase this repeat retention?
Yeah, absolutely. So we're calling that the net incremental benefit of the program, and we've got ways of measuring that with our customers to say, okay, if you look at everything else that's happening across other payment types, what is the net incremental benefit of this reward program and payment method together? And are you just switching behaviors? Are you moving people that would have been really loyal already just over to another way of doing it and actually giving them a reward where they probably didn't need one? And there are a few ways that we look at this. One is the age-old poll of, would you have done this transaction if this payment method had not been available, yes or no? So that's one thing. The other is looking at the repeat rate on our payment method and the reward versus the repeat rate on others. And we can see very clearly that there's about a 20% incremental benefit there. The last one, which is really interesting, that we've only just started seeing, is we've got really crazy high net promoter scores, A, from merchants and B, from consumers on our platform, because merchants are getting something they can't get anywhere else and consumers are getting something they can't get anywhere else. And what we've asked some of our customers to do is look at their net promoter score by cohort or by payment method. And actually what we're seeing in the data, very early still, is the net promoter score of our customers within their base is higher. There's lots of ways of doing it and measuring it, but again, it's merchant by merchant, case by case, and yeah.
Wonderful, thank you very much.
Sure.
And then another question come through. Open banking allows merchants to get more consumer traction data than ever. How do you think merchants can utilize the data to benefit their businesses? And how do you convince consumers that their data is safe and is only used to provide better services and also personalized products?
Lisa,
do you want to have a go? Or
sure.
Anything you want to touch on?
I can start.
Yeah.
So I think from all our discussions with, again, because Yapily predominantly work with PSPs and larger brands that then work with merchants. So we don't typically directly talk to merchants, but sometimes we do help our customers and have joint discussions with direct merchants. So from the chats that we had probably for the last year or so, first, the merchants are looking into adopting just the payment flow and of course enhancing the payment flow with basic data. But typically the next stage, what we're looking at and what we're discussing with a few quite big brands in the space, was that once you adopt this basic payment journey and the users slowly start to be used to it, so they are more inclined to already use it, they know the benefits, they get some loyalty points, discounts, and many other stuff that Dave was mentioning, you can build on that and ask them for their data. And with the data there, you need to be quite careful what exactly you want to do about it and how you want to position it. Because at the end of the day, it has to be clear how exactly it's going to benefit the end user to give away his bank statement in a way. And from that perspective, if you can clearly state, how that would benefit them, because obviously, based on this analyzed data, you can provide them even better loyalty, even better rates, and even more enhanced services, they are more inclined to give that data away. Probably one of the cases which is live now that is merchant related is buy now, pay later use case, where it's an obvious, very clear case of why the customers are sharing their data just to benefit from better rates on the NPL. But then also the customers that are launching it, they typically want to adjust the payment flows to ensure that there is a balance between when they charge and making sure that from the consumer side, this is doable. So I think it's still quite on the early stage of how can we use, let's call it big data analysis in that sense, for the enhanced merchant decision-making process, just because we're still finishing the base of payments. But that's definitely something that it starts to be a more and more vocalized question. And we already have a few pilots there, but it's just quite early days to give you some decent data and share successful examples and results of those pilots. I don't know if you, Dave, have more insights on that end.
Yeah, absolutely. So it's definitely the prize that the world's aiming for in this space is, getting consumer information to then be able to provide them with better decisioning at checkout, around product offering, all sorts of different options could be available or lit up because of what you know about that customer and where they're shopping and what they're spending and what their income is, and all those sorts of things can totally change the experience. Trust needs to be there, and as Lisa pointed out, it's a stepping stone. We're moving in that direction. There are definitely ways to get there, but I think going straight there actually would create friction in the checkout that would increase abandonment, and people wouldn't just be like, okay, I'm going to give you my bank account, unless there's a real reason. And that's the point around the rewards again, is if you give them a real reason, they'll probably do it. But it needs to be tangible and needs to be something that they want. And buy now, pay later is better rates, more money to borrow. There could be other use cases where, if you attach your bank account to our platform, we will give you, early access to tickets, on Ticketmaster. There could be all sorts of ways of doing this that would drive consumers to be like, yeah, okay, I'll give you my details. But we're all learning and exploring and experimenting what works and what doesn't.
If I just jump in, if I just circle back to the initial part of the question, I just want to be really clear about what happens in an open banking payment journey, because actually I think this is a security feature kind of built into the way that open banking works. If you're going through a checkout flow and you are doing a credit card, you end up having to type in or pre-populate, if your computer has saved that information, your card details, when you go through that process. In open banking, you actually don't do any of that, right? All you do is you select the bank that you bank with and you get redirected to your bank, which means that the merchant isn't seeing that information. You're going securely into your bank, authenticating with your bank, and then authorizing that payment. So it's a whole kind of level of security and privacy that's actually built in there.
Yeah, thank you for adding that. We had a question which was actually more around kind of the security measures. So I hope that answers it. Obviously, when it's a new payment, there are always going to be questions around security. So thank you, Nicole. I think it's just good to kind of have that refresher, or just to like keep in people's minds. So we're almost on the hour, so I'm just going to answer one more question before we close. As I said, please obviously get in contact with us if there are any questions which didn't get answered, or any more that you think of. As I said, there are also a couple of handouts which you will get. So one is about how to break free from card fees, and this will also just kind of help you better understand, I think, from Yapily's perspective, why open banking really helps you, you know, like save costs, not have card fees, things like that. So just the final question, do you see open banking being used mainly for smaller purchases, or do you think it will be more widely adopted? And they've mentioned the protection by Section 75 if you pay with a credit card. So can we just get a sort of better understanding about consumer protection and what sort of scale we think open banking will be used for in terms of payments?
Do you want me to kick off?
Yes, please.
Okay, so this is like an Easter egg of fun things. I'll try to keep it pretty simple. So first off, there's a couple of layers of protection that are built in with open banking payments and just in a larger payment ecosystem. So as part of the PSRs, you have payment protection built in. So this is if we make a mistake somehow in terms of the payment that we're processing on your behalf, there is a recourse for that. There are also laws around fraud and APP fraud that are coming into place, and that's authorized push payment fraud, just another acronym. And so there are recourses there in terms of reimbursement from your bank. And then there is in the UK, there's the Consumer Rights Act, and this applies to open banking payments as well, right? So if you have a problem with a faulty product, or it's not delivered or something like that, you can go through that process as well. In terms of what we're seeing in terms of like ticket size, we're seeing all sorts of different things happening there. I think there's a couple pieces at play. There's obviously how open banking payments are priced, and there's kind of two pieces to that payment. There's the price that you're getting from whoever your provider is for open banking, and then there's also that settlement piece that happens with your bank, the merchant's bank. So looking at what those costs look like, in some cases, you might not want to do a very small ticket item or small basket size, because it might not be that great depending on how the price is structured. On the other side of things, what you've got is you have banks with various limits. So there might be £10,000 limit on your banking payment. And that might be for the first time that you use a supplier. It might just be a daily limit that they happen to have. And those kind of vary bank by bank and according to the bank's risk tolerances. And so you're kind of dealing with some kind of challenges on either side. That said, we have customers who make very high ticket transactions going through our system. We figured out like a way to do that. And on the other hand, we do have customers who have like smaller transaction sizes going through. So it kind of depends on the nature of your business and how that fits in with bank risk tolerances to a degree. Because obviously, if you're doing a very large ticket item, you're going to have massive savings using open banking versus if you were going to be paying, an ad valorem pricing through your card, for example. I don't know if Lisa or Dave wants to add on to that one.
Just that we are seeing, my initial expectation on this was that it would be smaller transactions, and 20, 30 pound type stuff. And I was blown away when I joined the team at Super, because we're seeing tens of thousands, very, very frequently coming through, and in use cases that we just wouldn't expect. So I think based on our understanding of it, it's the level of consideration in the purchase then determines how comfortable people are to use their bank account to make a payment rather than a card. So sometimes people will pay for a car using open banking because they've thought about it for a while and they've got the money in their bank account and they feel like that's the right way to do it. So yeah, it really depends, but we're seeing on both sides of the scale all sorts of things happening.
Yeah, just to add maybe to Nicole's Dave's points, even if you think about yourself, all of us have a bit of a different behaviors and different things we like or things we're more comfortable with. And it takes a very long time to change the behavior, or sometimes just generations to change the behavior. So when it comes to open banking and loyalty and discounts, again, we are not talking about completely replacing the existing payment methods. We are saying that it's just going to be able to compete on par with it, which means that it will slowly take a percentage, and then a higher percentage, and hopefully a higher percentage in the long run. But it's all about how it is positioned and how clear it is for the consumer, how they can benefit for it in the first place. Obviously, it has to be clear that it's super secure, and at the end of the day, we rely on banks for everything there, from the authentication to sharing the data, and that has to still be the case. And with that in mind, I think we're gonna see it just like raising and be on par with the alternative payment methods. But we can't see a massive shift of pretty much the entire population switching instantly for it. I mean, I wish that would be a dream, but being realistic, it will take some time, and it's just a matter of how exactly you as a merchant or as a PSP want to position it and make it very clear for the consumer.
Great. Well, I think that was a really good question to end on. So thank you, audience member, for asking, and thank you very much, panelists, for giving such an in-depth, comprehensive answer. We are officially on the hour, so I would like to say a massive thank you to Lisa, Nicole, and Dave for taking the time to share your insights and your expertise and really unpick this very important topic, I think, which will really make such a difference for merchants in 2024. Please be sure when you're finished with this session to visit the Yapily website and also the Super Payments website, and of course reach out to us if you have any questions, or just want to talk further about Super Payments or Yapily or open banking. So thank you all so much for taking the time, and thank you, audience, as well, for taking the time to sit down with us, and we've really enjoyed it. Thank you.
Thank you.
Bye-bye.
Thank you. Bye.